Hello everyone, my name is Majid Rahimi and you're watching part 5 of our classical technical analysis course. If you want to start this course from scratch, you can reach the first video here. If you are not a subscriber yet, just click on subscribe button and the notification bell under this video to get notified when I upload a new video. In the previous video, we understand the importance of reversal patterns and trading intermediate trends, and we talked about head and shoulders pattern. In this video, we want to give a way to recognize head and shoulders pattern and also a target for following the price after recognition of the pattern. Head and shoulders patterns have some features, but some of these features may not appear in most of the cases. Here we are going to mention 4 minimum requirements of each head and shoulders pattern, and if any one of these items was missing, we should doubt on formation of a head and shoulders pattern. Point A: a strong rally with a high amount of volume with a minor retracement which has a considerable lower volume. This is called left shoulder. Point B: another high volume rally which can register higher level than previous rally, then another retracement with lower volume to somewhere near the bottom of previous retracement. This makes our head. Point C: third rally with a considerable lower volume than the highest points of our head and left shoulder. This rally fails to register a higher price before another decline. This is called right shoulder. Finally, point D: if we draw a line, which is called neckline, across the bottom of retracement of left shoulder and head, and after point C, the prices decline enough and close below the neckline by nearly 3% of the stock's market price, we have a completed head and shoulders pattern. There are some points here I have to mention. Every point we mentioned is important, and we can say we have a head and shoulders pattern only if we have all A, B, C and D points. Volume in A, B and C point is important, and we should see each item to recognize a head and shoulders pattern. But volume is not available in all markets. We cannot reach the exact amount of volume, for example, in Forex. There's a tick volume in Forex market which is different from the volume, and we may talk about it later. If volume was not available in some market, we have to ignore it and see just price action. Another point is that 3% of stock price is good for a stocks market. It may not help you in all markets. For example, if you want to wait for 3% in Euro USD chart, you may lose all the benefits of head and shoulders pattern because 3% in Euro USD is a large movement. You should get familiar with the shape of head and shoulders and compare the considerable penetration with the shape, not only the amount. The neckline tends to be horizontal, and the right shoulder tends to look like the left in price confirmation. Of course, not in volume, as we said before. After recognizing the pattern, we should know how much decline we can expect it. Measure two amounts, and then minimum target of pattern would be the lowest amount of one of these measurements. Let's see it in picture to have a better view. First, measure the amount between top of head to the neckline. We name it 1. Then measure the first rally making left shoulder. We name it 2. The minimum target would be the lowest between these two measurements. So in this picture, we can expect this target as a minimum. The maximum target depends on market situation and the size of previous rise and a few other factors, so we cannot decide about it as we did for minimum. This video has come to its end. In the next video we will see some examples of head and shoulders patterns, and we will continue our studies about reversal patterns. Send us your feedbacks as comments, and don't forget to subscribe now if you're not a subscriber yet. Thanks for watching, have a good time, and bye.